So I'm Melissa with the realty firm. I've been in real estate for 3 years now, and I think it's really important to bring value to clients and people who are interested in purchasing a home, which is why I have partnered with you. And introduce yourself, let us know what you do, and we can go through the process of what it's like to buy a home for the first time.
Thank you so much. So my name is Kasia Miletich. I am with Get a Better Mortgage. I have been a mortgage agent for the past 2 years. It's coming up. And prior to that, I was in banking. So Scotiabank and TD. So over 10 years of experience in the finance industry. And I completely agree with you. I think it's really important to kind of iron out everything from start to finish, let everybody know, what the process is so that it's a smooth transition from renting to buying or, buying, selling, and owning, so on and so forth.
Yeah, absolutely. And like I said, we're going to be talking about the process of buying a home for the first time. And I think that like buying a home can be one of the most empowering things that someone can do, but it can also be very overwhelming and stressful, and people don't know where to start. So I usually find that, when people decide that they want to purchase a home, they'll either start going to open houses or they'll register online, and usually they'll be connected with a real estate agent first. And I mean, we have our own process of, doing buyer calls and buyer presentations and outlining exactly what it looks like from start to finish. But one of the main pieces of that conversation is qualifying for a mortgage, because you don't want to be shopping for a home without knowing what you can buy and afford first.
Right.
So that's why it's key that us realtors are connected with great mortgage agents like yourself to help our clients get sorted. So, um, let me just ask you, what are the main documents that you would need for pre-approval? Because, I think a lot of people also get really overwhelmed with what that looks like and what they would need to have prepared. So if you could outline that, I think that'd be great.
Yeah, for sure. I mean, it's the biggest purchase of your life, right? So being prepared and not overwhelmed is empowering in itself. So the documents that we look for a pre-approval, really simple. It's going to be your income documents. So if you are employed through a company, it's going to be things like your T4, your pay stub. Um, we're going to ask you questions about, how long have you been employed for? Typically, you'll need a 3-year history of employment. Um, Not to say that you can't have a new job, you can. There's just maybe going to be a little bit of extra things that get asked for, like a letter of employment. If you're self-employed, you do need to be self-employed for a minimum of 2 years to qualify at a regular kind of Schedule A bank. But it's just your tax documents there too. So T1 general notice of assessment. And then, things like confirming your down payment. So getting 3 months worth of your banking statements of any and all accounts that you're taking your down payment from. It's a good idea to review this up front because then, let's say you have a little bit of a shortfall on your down payment or you have it in multiple accounts or maybe you have it in an account that isn't really doing you any service in the time being. It's a good idea to review all those documents up front, just so that, I can tell you, okay, this is great, or okay, we need to work towards this, or perhaps here's how we can, manage the shortfall of down payment. There's different ways like gifted funds um, or working towards getting more down payment, right? And then, of course, your regular things like identification and consent to pull your credit bureau. So those are the things that we're going to be looking for to get that pre-approval out for you.
Awesome. Now, I have a lot of clients who will go online. So let's say a TD website, and they'll put in their income and it'll spit out a number. Is that a good number to go off of? Like, what's the difference between pre-approval and like a pre-qualified number?
Yeah, so I'm guilty of that myself. Before I was a mortgage agent and before I even bought my house, I was like, oh, let me go and see, right? I mean, it's a good indicator of potentially what you could be pre-approved for, but it's not the same as a pre-approval, and it's not the same as, dealing with someone like a professional where they're going to look at everything. They're going to look at your credit. They're going to look at your income, like anything that's maybe unusual. That's when we're going to speak about it and make sure that it's not going to, give you any bumps in the road for your pre-approval. Those online types of services, they're pre-qualifications. Like I said, you could still get a good idea of what you qualify for, but speaking with a professional, you're going to have those detailed conversations and make sure that you get a pre-approval. On top of that, you get a rate hold. So with a pre-approval, you get a rate hold for 120 days or 130 days, depending on the lender you go with. So you're kind of, shielded from any rate adjustments that may happen while you're looking for a home to purchase.
That's awesome. I mean, that's a really long time for someone to be able to like start the process and have enough time to be able to find something.
Yeah.
I think having that is great, especially when we don't really know where the rates are going to go. How long does a pre-approval normally take?
So if from start to finish, when I meet with the client first, I get all their information, and then, depending on how quickly the client provides the documents that I need, um, typically it'll take a day or two for me to hear back from the lender saying, yep, here's your pre-approval and you're good to go. So I would say, from start to finish, once documents have been collected, it's going to be a day or two.
Okay, yeah, that's pretty quick. I've
Mhm.
had a couple people that I've talked to over the last couple of years, and they've tried to do the pre-approval, but they said that, they weren't able to get financing because they had, just purchased a car within the last 6 months or a year or something like that. What are the biggest factors that determine that pre-approval amount?
So basically, the way that you can look at it is, okay, level of income versus level of debts.
Mhm.
So we look at a thing called ratios. So basically, you want to be within a 39-44 ratio, compare like comparing your income to your debt load. The higher your debt load, the less approval that you're going to get. So something like a car loan, something like a student loan, even high credit card debt or lines of credit debt, that definitely can impact your approval.
Okay, so if someone is thinking about purchasing within the next couple of years, definitely getting those down.
Definitely getting those down. And if you're thinking about buying a car, potentially look at it after you purchase your home.
Yeah.
'Cause those
Okay.
are the biggest impacts, like the loans, because even if you prepay the loan, it doesn't matter. Your payments are still going to be calculated the same. So it honestly, it's better off to not get that loan prior to buying a home.
Okay. Now we'll usually tell people, once they have a firm deal in place, so in between the time that the deal is firm and they close, we say don't open any new credit cards, don't do any major like furniture, credit card shopping,
Yeah.
just confirming that is the
A
case.
hundred percent, 100%. Save it for after you close. And especially because things change, right? So let's say sometimes, sometimes there's a really good rate offer that happens kind of in the middle of an approval, and potentially the original lender that we landed on doesn't meet the expectations of the client, or perhaps we want to take advantage of a better offer. As soon as I pull that new credit bureau, because the credit bureau I can only use for 30 days. So if
Mhm.
it's past the 30 days and if I have to submit a new credit bureau and all of a sudden, you've already gone shopping for furniture, et cetera, that will impact your approval. So no
Okay,
changes during the firm purchase offer to closing, I would say.
good. Good advice. Um, The way that I've understood, so when you go for a pre-approval, if you're going to the banks individually, so you go TD, Scotia, CIBC, wherever,
Mhm.
if you're doing three different applications, they're pulling your credit three different times versus when you go to a mortgage broker, they're pulling it once, but then you've got access to all of the different banks inside of that, correct?
Yes, so they are pulling your credit at different times. So here, to your point, for working with a mortgage agent, um, I only pull your credit once, right? And then we can kind of take a look at all the options for you.
Mhm.
Not every lender is going to do a pre-approval as well. So we are limited to who will do a full review on a pre-approval.
Mhm.
A pre-approval is basically giving you permission to go and shop and holding rates, right? Um, Typically what happens is to mitigate that credit pull, like at each lender, I'll have a detailed conversation of, okay, we're going to do your pre-approval here. This is what you're good for. But to save you from pulling multiple credit bureaus, let's hold this pre-approval right now. And then when you actually do make a purchase, because when you make the purchase, you're still going back to the lender to make sure that the house is great, the appraisal comes in, so on and so forth. So you want to get the commitment from the lender, right? At the time of actually making an offer, I always sit down with my clients and I ask them, all the questions like, what kind of a mortgage do you want? What kind of a term do you want? Just to make sure that we're going to the right place
Mhm.
because there's nothing worse than, having multiple credit bureaus pulled and multiple, offers on the table, right? Like, let's kind of get it right the first time.
Right.
So, yeah.
Does every single lender do an appraisal, or does it depend on the lender? Does it depend on the home?
It depends on a few things. So some lenders will do what's called an automated appraisal. So it's like a desktop appraisal where they'll use a program that basically like pulls information like around that area to see what recent sales are, and they'll spit out a number. If that comes back, then there's no need for a full appraisal. Most of the time, too, if you're putting less than 20% down, so if it's a default insured mortgage, then the default insurer will do the appraisal. So typically there's no need for a full appraisal. Sometimes, when the property is unique, so let's say it's a heritage home. We have a lot of those in London, Ontario, Wortley, Old East Village, so
Mhm.
on and so forth. There may be a need for an appraisal. And those are reasons why, you'd put a financing condition in to make sure that the appraisal comes in.
Right. Okay. Now, just jumping back to the pre-approval and credit. So when you're doing that, does the pre-approval hurt the client's credit score?
It will deduct a couple of points off of your credit score. Like you'll see a small change on your credit bureau, but like the way that I look at it is, you do the credit check, a couple points will come off. Typically within 30 to 60 days, that credit will come back up. You know what I mean? So if you're not doing anything crazy, if you're making sure that that your credit cards are below a certain limit, that you're not, overextending, things like that, it'll all go back to normal really quickly, right? Like you'll see those couple of points jump back up. And this is why it's important too to have a discussion with a mortgage agent or a professional to discuss your credit. Do you have any issues, right? Like is your credit weak?
Mhm.
Potentially, that could be a place where we can have a conversation of how to make your credit better to make
Mhm.
your application stronger.
Absolutely. Now, can people still get a mortgage if they have really low credit, or like are there other options for them?
There definitely are other options. So typically if your credit is lower, I would below 640, I would say something like that. Like there's different lenders will look at different minimum credit scores, but there are alternative lenders, so B lenders that will consider lower credit score. And if we need to place you there, if this is the way that the kind of the door to access, your home,
Mhm.
then we can take advantage of that, right?
Mhm.
For first-time home buyers, it's important to know that typically the alternative lenders won't look at a down payment less than 10%, I believe. So it wouldn't be something where you could put a minimum down payment on as with the alternative lenders.
Right. Okay. I mean, that's good to know. I think a lot of people think that, they don't have, good credit and that they can't buy, but there are definitely other options, especially if they have a good amount saved for a down
For
payment.
sure, for sure. And all it takes is a conversation, right? Like, there's a lot of people that'll say this and that and whatever, right?
Mhm.
But the best way of knowing is to talk to a professional, right?
Yeah,
So.
absolutely. So, I mean, and speaking of down payments, when does that normally need to be paid?
So the down payment will be um, the down payment will be paid usually about a couple days to a week before your closing. So all of that actually gets taken care of with your lawyer who you've chosen to close your purchase with. And they'll let you know, okay, this is what you need to bring for the balance of the down payment and closing costs, et cetera, et cetera. They give you a number and then you deliver a draft check to the law office, and then and that's how that gets done. So typically it's not about a week or so prior to closing.
Mhm.
Your deposit does get taken into consideration for the down payment, which, as you know, that happens usually the day after purchase or so.
Right. Yeah. So I was going to say a lot of people get confused over, is down payment the deposit? Are those, two separate things? So
Mhm.
deposit would be paid within 24 hours of an accepted offer. The remaining balance is paid a week before closing, but the initial deposit that you make when your offer does get accepted comes off of the balance of the down payment.
That's right.
Yeah.
That's right. Exactly.
Okay. Um, can your pre-approval amount change?
Yes. So depending on your circumstances, so it can change in a negative way, it can change in a positive way. So, we kind of discussed this previously, if there's any changes in um, debt load, then it will impact your approval. But there's also positive changes that can happen. So, potentially you got a promotion at work, you're making more income now. Let us know those things because your approval can change. And even now with the rate environment that we're in, rates are coming down. So, let's say even after that initial 120-day pre-approval period, or even within that, sometimes the rates change, and we can lower the rate to give you more money on the approval.
Mhm.
Then that can change as well.
Okay. What would happen if a financial situation did change during the pre-approval process?
Well, first and foremost, let everybody know that you're working with, yeah, letting your mortgage agent know will help because then, I can best guide you with, okay, what can you do? Or perhaps it's not as impactful as you think, right?
Mhm.
So, but let us know right away. So if any circumstances change with income or debt or down payment,
Mhm.
let the professional know right away so that they can best guide you. And then they should let you know as well as their real estate agent because, you're going to want to know, okay, maybe I have to lower the budget or maybe I can increase the budget, right? So, but the best thing to do is let us know right away.
Okay, awesome. Communication is key.
Communication is key in anything.
Yeah, absolutely. How much do people normally need for a down payment? I hear people thinking that if they're a first time home buyer, they can put down 5%, but then that's the only time that they can ever put down 5%. Can they ever use that again? Like, what are the guidelines around that?
Yeah, so the 5%, it doesn't matter if you're a first-time home buyer. So you can you can buy your primary as long as it's a primary residence or a secondary home and you qualify to put less than 20% down, then you can put 5% down all day long for the rest of your life. It's yeah, it's not a first time home buyer rule. However, the thing to keep in mind is 5% is accurate on up to $500,000 purchase price. So if you're putting less than 20% down, then there's tiers that you need to follow for down payment. So anything up to 500,000, yes, it's 5% down payment. Anything over and above 500,000, you have to put 10% on the remaining outstanding. So really quick example is, $600,000 purchase, 5% on the first 500, and then that remaining 100 to make up the gap to 600, you have to put 10% down. On top of that, you have to make sure that you have enough for closing costs. So as a first-time home buyer, and not only as a first-time home buyer, but any home buyer, the lender will want to make sure that you have enough funds, not only for the down payment, but also, to pay the lawyer, to cover land transfer tax, and so on and so forth.
Yeah, absolutely. There's definitely a lot that can come up at closing, and having those conversations ahead of time will help you feel a lot more confident and secure and way less stressed come closing day.
100%.
Yeah.
Yeah, knowledge is power, right? Like if you go into something knowing exactly and like and let's say if there's even a surprise there, but you've already had the conversation, you're going to be able to navigate that a lot better
Mhm.
than for those clients who kind of go in with it blindly and
Yeah.
and panic, right?
Yeah. Now, I see a lot of, let's say kids purchasing their home and they get down payment help from mom and dad. How
Hmm.
would that work when your down payment is gifted to you?
Yeah, so gifted, you can definitely have a gifted down payment. So the biggest thing to remember is any gifted down payment has to come from an immediate family member.
Mhm.
So, there's a lot of times where, perhaps you have like really close family friends that you grew up with, and they want to help you. Unfortunately, you can't let that can't happen, right? So it has to be from an immediate family member, but that's completely fine. And even the total down payment can come from gifted funds.
Okay. And would you need like a gift letter or something to prove
Hmm.
where it came from?
Yeah, yeah. So typically the lender will want a gift letter, which the lender provides. So you don't have to, go in and write a gift letter or anything like that.
Mhm.
I'll provide that to you from the lender. And then most of the time you either need to show that that money is available. So, mom and dad will need to provide a statement from their bank account or, a stamp from the bank saying, yes, this money is here or a deposit into your account a minimum of 15 days prior to your closing.
Okay, perfect.
Mhm.
Yeah, that's really good to know. Lots of I'm seeing a lot of gifted down payments right now, which is great for sure. It
Yeah,
helps people kind of get into the market and, you know,
for sure. And it's a really great way of doing like a sort of like a living inheritance,
yeah,
right?
yeah,
Instead of, waiting and not kind of seeing the benefits of that money, a
yeah,
lot of people are doing it this way, which I think is fantastic, especially now these days. Like we both know how expensive it can be.
yeah,
So I encourage people to have those conversations with their family members ahead
yeah.
of time.
No, absolutely. Are there different types of down payment assistance programs?
So at this time, there used to be a government program that has since been discontinued. So there really isn't any that I can think of right now.
Okay.
Perhaps there's going to be a new one that comes out, but not at this time.
No, okay. Can your down payment come from like a retirement savings plan?
It can. It just depends on what type of an account it's in. So if you have an RSP,
Hmm.
for example, as a first-time home buyer, you can access the RSP money. Um, and basically it's a form that you fill out and confirm that you're a first-time home buyer, and you can make your withdrawal tax-free from that account. And then I believe you have 15 years to repay what you owe. Um, and then you have to start paying it back the third year after your purchase. You have to start paying back those funds
Okay.
that you've borrowed. So technically, you're borrowing from your RSP.
Yeah.
Um, Pensions at work, it depends. It depends on whether it's a locked-in pension. Locked-in pensions you won't be able to use. Um, but there could be, there could be room to use your pension. It just all depends. So again, it's something where if you provide the statement and and what kind of pension you have or what kind of RSP you have, then I can take a look at it and I can let you know, hey, yes, you can use it, or potentially call your pension provider, see if there is an option for you to use it.
Awesome. Now I hear a lot, this will be my last question for you about FHSA. Can you
Yes.
tell us what that stands for and what it is?
So it's a first home savings account.
That's a mouthful.
I'm like, when the account first came out, I'm like, that is a mouthful.
Yeah.
But this is a really great account. So any money that you put into there, it's basically tax deductible. So you do get a slip similar to your RSP contributions. The only difference is that it's strictly for purchasing your home. So
Mhm.
if you know that you're buying your home, um, I would even recommend putting money into this account over the RSP
Mhm.
to take as a first time home buyer. Of course, if you have your RSP already started, I mean, this account just came out, I don't know, a year or two ago, something like that. Um, but if you already have your RSP, then absolutely use it. But if you're starting out and you do want to open up an account, I would go with the FHSA account for sure.
Awesome. Yeah,
Mhm.
no, I think it's a great account and a great tool for first-time home buyers to use. So, if people haven't looked into it already, they definitely should.
Definitely, it gets the ball rolling. It's like, okay, well, I'm doing this, right?
Yeah,
So I guess I'm buying a home.
yeah, yeah, exactly.
Gets you motivated.
So, do you have any questions for me? Let's maybe outline a couple things that, people should look for once they start looking for
For
home.
sure, for sure, for
Pre-approval and
sure.
where to
Yeah.
go.
Yeah, so glad that we kind of outlined that process. So, after going through all of that, and coming to yourself, what should home buyers look for when touring a home when they're first time home buyers or buying their home?
So I would say that when people just get their pre-approval, I like to set people up on like what I call like a marketplace education. So usually I'll pick the first couple of homes that we see um, in the areas that they want, but slightly, maybe bottom of their budget, a little bit top, so that they kind of have an idea of what the values are. But I would say that each time people are looking through a home, you want to look at the major things. So structural, is the foundation in good shape? Is there any water coming through in the basement? That
Right.
could be something that could be a costly repair. HVAC system, so your furnace, your AC, is the roof in good condition? I think it's easy, especially when homes are staged, for people to get tied up in the staging, and it's makes them feel all emotional. They can see themselves living there, which is great, but you want to make sure that you're looking at those big ticket items to make sure that those are in really good condition and that the house is solid and has good bones.
For sure, for sure. And is that something that, let's say the client is super in love with the property, would there be room to kind of take a look at all of those things when they buy the house, or how does that work?
Yeah, so I mean, we're in a market right now where we're seeing a lot of conditions. So people will put in an offer on a home conditional on having a home inspection, which is awesome. I think that every home really should have that so that, you have a peace of mind and really know what you are getting into. So, if the offer does get accepted, we would have, say, 3 to 5 days to get a home inspection done. They would bring in a home inspector. They would check everything in the house. So they'll check the foundation, they'll get up on the roof, check out the attic, make sure there's no moisture coming in and that everything is properly insulated, the electrical, all of that stuff. So once we get that report back, we will know and have a better idea of what the home really is. And if there are any major things that need to be fixed, they can take that into account if they want to continue to move forward or, take that and, back out if it's too much of a risk for them.
Right. And there could be an opportunity for a price adjustment at that point too,
Yeah.
right?
Yeah.
Sometimes.
Sometimes.
Nice
Sometimes.
to know. So when you're drawing up the purchase agreement, let's say uh, the clients love it, they're ready to put in that offer. What are some of the things that should be considered in a purchase agreement, and what's the flow of that?
So I'd say four main components of the offer would be the purchase price. So how much they want to pay for the home, your deposit amount. So if they do accept it, how much are you going to be putting down as that good faith payment? Closing date also plays a really big factor into your offer because if the seller, let's say they are selling their house, but they need time to find something else, they might want a longer closing. Obviously, working with the buyer, you're going to give what you want, but when you're competing with other ones, you want to try and match up what the seller wants to make your offer more attractive to them. So closing date and then any conditions. So if they want to put in a condition on home inspection or financing, most of the buyers, like almost all of them, are already pre-approved. I wouldn't submit an offer for somebody who wasn't pre-approved, but sometimes they want that extra week just to make sure that the broker can look at everything, make sure that everything's ironed out, they're 100% good to go. So yeah, those would be your purchase price, deposit, closing date, and any conditions that you want to include.
Amazing. What real estate fees should a first-time home buyer expect?
So no fees that they have to pay to the realtor. That is always covered by the seller. So to use a realtor as a buyer is completely free to you.
Amazing.
I would budget for home inspection costs. Those can range
Okay.
from, I'd say around 300, 3 to 4, just depending on who you use. Lawyers' fees, anywhere from 15 to 2,000, again, just depending on the purchase price. Insurance, you're going to want to take that into account. Most home insurance companies, you can expect, anywhere from 80 to 150, especially if you're a first-time home buyer. So this is another point I would make because I used to be an insurance agent. I was in insurance for 7 years.
Okay.
If you are renting, I would definitely set up tenant rental insurance because that starts your history same like car insurance. First time drivers, it's really expensive, but as more experience you have, the cheaper your premium gets. So if you've either lived with your parents or you've rented, but you've never set up tenant insurance, it'll be a lot more expensive for you when you set up your home insurance.
Oh,
'Cause
wow. That's
that's
interesting. I didn't know that.
yeah. So when they have tenant insurance and like a history on you, they see, okay, they've been paying, they haven't had any claims. When you go to set up your home, it's a quick switch over. They already know who you are and you're likely going to be getting a better rate.
Oh, that's great to know. So
Yeah.
everybody get your tenant insurance. And then finally, okay, the big moment happens, your offer gets accepted. What comes next?
So once your offer gets accepted, again, within that 24 hours, you got to go and make your deposit. So you can either do, drop off a check, a wire transfer. That's the biggest piece. Then if you have a home inspection or any conditions that you have to fill with financing, we would make sure that all of the paperwork gets sent to all of the individuals that need it. Scheduling that home inspection, completing that. Once everything is satisfied and the buyer says that they still want to move forward, we would draft up paperwork saying we've fulfilled conditions, we're ready to make this a firm deal. Then the deal goes firm. After that, it's really just waiting for closing. So usually there will be a couple walkthroughs that people will want to do.
Okay.
Maybe one to bring their family, do some measurements, walk the property again. The second one will usually be kept for a couple days prior to closing. Um,
And what
so
kind of things are you looking for? Like, is there anything that could happen in the walkthroughs that will derail the deal, or have you?
yeah, there could be. I mean,
uh,
like, you want to make sure that the property is left in the condition that you saw it in originally. So, if those people, if the original owners, let's say they were moving out and in the process of moving, had damaged some walls or, you know, things were left broken, that's something that you're going to want to take to your lawyer to either they have remedied or you can, adjust price at that point too.
Okay.
We just want to make sure that there's no damage to the home, that appliances are working, lights are turned on, there's hot water. So usually for those final walkthroughs, I'll go in earlier and I check all those things myself. And then, buyers will come in and do what they need to do. But yeah, just making sure that everything is in the condition that it should be and that nothing is broken or damaged.
Fair enough. And how do they get their keys?
A couple different ways. I mean, usually they would pick them up at the lawyers. So if keys are exchanged there on closing, they'll get a call from their lawyer anytime between 9 and 5. So closing is a really just a waiting game. So once the lawyer
Hopefully
calls you,
earlier rather than later.
once the lawyer calls you and says, okay, we're closed, you're good to go, you can either pick it up from them, or sometimes, I'll meet the clients at the property to give it to them out of a lockbox. So it really just depends on how the deal is structured. So
Oh, that's so nice. I love that.
yeah. I think it's a little bit more fun picking it up at the lawyer, but
Yeah.
makes it a little bit more official, more exciting. I remember picking up mine at the lawyer and, it's a different feeling than just taking it out of a lockbox at the house. So
Oh, for sure, for sure. Yeah, yeah, definitely. I have to agree with that. I picked up my keys at the lawyer's too, and it was I
yeah,
couldn't even contain myself.
yeah, yeah. So, anyways,
Well,
I think that that was a great, outline. I feel like that definitely brings a lot of value to people who, are thinking about purchasing a home. And obviously, people know that they can reach out to either me or you for help in whatever they need.
for sure, for sure. No, it was a great conversation, and I'm happy to start helping first-time home buyers with you.
Yeah, absolutely. Well, thank you so much for doing this with me, and we'll chat soon.
Thank you, Melissa.